Hello, hello. Hey, everyone. Happy Thursday. Whew, hope everybody is having a great day today. Welcome to our Badass Moneymakers membership Q&A. We've got some questions today. We got some good questions today. So I don't love how it's very tall. I feel very hidden, but that's okay. We are going to go with it. Let's see. Hey, hello. So good to see you. All right, hold on. Let me pull up my questions. I cannot walk and talk at the same time. So I'm going to focus on the questions and not say hi to people at the moment because I will get super distracted and then we'll never get anywhere. Okay, so as a reminder, so we're now doing inside of the membership in case anybody hasn't been paying attention for a while, which is okay. Inside of the membership, first week, still the workshop. Second and fourth week, now money meeting sessions where we all hop on Zoom. We work through our numbers kind of separately, but together. I'm there to answer questions and give guidance and all that. Third week Q&A. So now these Q&As are monthly. We've made that switch because we just found that people were really craving more of the money meetings, like the deeper dive sessions versus the Q&A. So we switched it up that way. If that changes, if people are clamoring for those Q&As or whatever, let us know. Let us know what you like. Let us know what you want more of. We are very happy to continue to iterate this thing as it grows. But that's what we're doing here this week. Next week will be our final money meeting session of October. So we're doing that next Wednesday at 2 p.m. Eastern. We try to change up our money meetings so that one of them's on a Wednesday, one's on a Thursday, so that folks can attend at different times. Thanks, I'm coming out of the fog. Boy, do I know that. As somebody who just went through the 10/15 tax filing deadline, that's how I would describe it as well. I know that's not your reason, probably, but I get the whole coming out of the fog thing. So I'm glad you're back. Welcome back. It's good to have you here. All right. Also, I know where I was going with that. I had a point in bringing that up. We do ask you to try to submit your questions for the Q&A in advance. You can always do that by going to megkwheeler.com/QA. But for those who are here live, you can also drop questions here. And if I've got time, I will go ahead and answer them. So definitely let me know if you've got questions. Put them in the comments. Okay. We got 2 questions today, at least so far, from people who pre-submitted. I'm going to go ahead and pop those up so we can get through those. And again, for folks who are here live, let me know if you've got any questions. Remember and both of our questions, I think, are actually about our workshop this month, which is great. They don't have to be, but I always love to see that. If you didn't catch that workshop, it was our budget workshop. Definitely go back and check it out. It should be inside the Facebook group. It should be on the YouTube channel and then also in the member portal. Why don't we do a quick update on the new member portal while I'm here? I feel like every time I come in front of you, I'm like, let's do an update. And usually the update is we're almost there. And the update really is we're almost there. Next Thursday, we are recording the final videos that we need to do the move to the new member portal. So I anticipate it'll be early November when we will get those emails out to you. Everyone will be added to that new member portal. Thank you again for your patience. You all know this is not when I wanted to be rolling it out. I wanted to be rolling it out 3 months ago. Tech happens, life happens. That's where we're at. All right, let's dive into our questions. So our first question, and this is from Anna. Our first question is, I get really frustrated with budget, so I gave up, but I really want to make one for 2022. How can I make this less frustrating? This is a good question. I know budgets can feel super duper frustrating and scary for a lot of people, and for a variety of reasons. Now, Anna, you didn't say exactly why you're frustrated, but I'm going to take some guesses if that's okay. I know a lot of people get frustrated with budgets because they feel like they don't work. They feel like they write all this stuff down, they plan all this out, and then it doesn't work. Like the numbers just don't add up. They don't end up making the money that they budgeted for, or they end up needing to spend more money. I just feel really low. There we go. It just doesn't work, right? So that's a reason people get frustrated with budgets. Another reason I've heard people get frustrated with budgets is because they don't know what to put in the budget. They're staring at this like Excel spreadsheet and they're like, I don't know what to do. How do I fill this out? And then another reason I've heard people get frustrated with budgets is it takes more work. They've got to like keep it updated and they've got to, I don't know, it feels like something they create and then they set aside and they never think about it again. And so what's the purpose of having one? So Anna, I'm not sure exactly what your reason is for being frustrated. Maybe it's all 3, but let me say this about a budget. And I said this in the budget workshop, and I'm going to say it a million times until the day I die. But a budget is a roadmap. A budget is not a final answer. A budget is not the only answer. So it is a roadmap, meaning it is one way to get from where you are today to your goals at the end of whatever that period is, usually a year. So when we're designing that roadmap, we're thinking about how can I get from here to there where I want to go? And we're mapping out a way, a process to help us get there. I'm going to sell X number of client spots and I'm going to spend this much on expenses and et cetera, right? And that gets us to that goal at the end of the year. But that's only one way. Much like with a roadmap, I don't think I've ever encountered only one way to get somewhere. There's usually at least a second way, if not multiple ways. And that's what your budget can be. So as you go throughout the year, if you're finding, I didn't get those revenue numbers right, they're going to be different than what I thought. Or, I really under budgeted on my expenses. It's actually going to take this to run my business. That's okay. You adjust your budget and you look at what you had and what you think you need to have, and you rework it. So if we're going to increase expenses over here, where can we decrease them over here? Or where can we increase revenues? So again, the budget is just a tool to help us continually tweak that roadmap to make sure we still hit those goals. Like picture you're driving, right? And you're like, okay, we're going to go this way for a while. There's a detour. We can't go that way. So let's turn left. Let's go around this way. We can't go that way. Now we're going to go back this way. That's what a budget is. So it's okay to continue to iterate it throughout the year as things change. Things always change. I had a very different business 1 year ago when I made my budget for 2021 than I have today. Now, some things are the same. Some things are what I thought they would be. Other things are not at all. So my budget looks very much different today than it did a year ago today. And as I go to create my 2022 budget, that is just one way of us getting to our goals for the year. But I guarantee you my 2022 budget will not happen as planned. I guarantee you things will be different, and that's okay. So if you're frustrated about budgeting, think about your budget in that sense. Now, let's say you're frustrated about budgeting because you feel like you create it and then you set it aside and you never do anything with it. Well, that's where I would encourage you to set aside some time on a regular basis. This could be those money meetings, which hopefully you have on your calendar. And if you don't, I want you to put them on your calendar. Set aside that time to actually pull up that budget. And there are two things I generally want, maybe three things I generally want to do with a budget when I'm looking at it on a regular basis. The first is I want to add my actual numbers in. So for example, we're in October. So when October ends, I'm going to go into my budget tracker and I'm going to add in my actual numbers for October so that I can compare my October budget versus my October actual numbers. Okay, that's number one we want to do. Number two is we want to analyze the numbers that are in there. So let's take October as our example. Let's say I add my actual numbers in and I realize, hey, my revenues were $2,000 more than I thought, but my expenses were, $1,500 more than I thought. I want to look at why. Were these one-time things that probably will never happen again? Or were they because our expenses have just gone up? Or we're just getting more and more business in? I want to understand that, and I want to understand the impact that has on the business. I also want to understand if I'm not on track to hit my goals, what do I need to do differently? What can I change for next month? What do I need to adjust? So that's step number two, is really analyzing and figuring out what to do there. And number three is making those changes. So it may be that I'm going to adjust my budget. Maybe I say, hey, my revenues have gone up quite a bit. I can now afford to hire that person. Let me add that to my budget for the last few months of the year. Cool. So I'm going to want to do that as part of this sort of budget review. So those are the three steps that I would recommend you do on a regular basis, ideally twice a month when you're doing your money meetings, but that will help make that budget more of a useful tool for you. And I will tell you that whole process I just described takes less than an hour. To be honest, you can probably do it in 30 minutes. If you've got a really good accounting system that categorizes all your numbers so you can get them into the budget really quickly. I would really encourage folks. So we did our budget workshop in October intentionally because the budget process isn't something you should do in a weekend. It's not something you should do in an hour. It's something you should do over a period of months. So we've already started our budget process for 2022. And what I did was I sat down and I said, what do I want to do this year? I knew there were things I wanted to do. I knew that I wanted to potentially take a couple of my employees full time. I knew that I wanted to pay myself more. I knew that I wanted to streamline my services so that I wasn't constantly feeling like I was like all over the place in what I was offering. I knew that I wanted to change up our sales model and the timing of when we sell so that we onboarded a lot of our clients at the same time and really streamline that process. So when I sat down to build my budget, to start building my budget in October, I built all of that in. Now, that was the first step. I am continuously going back and iterating that budget for 2022. And in fact, we're going to look at it, or look at parts of it at least, when our team has an annual planning retreat in a couple of weeks. And then I'm going to go back again and do another and probably final review at that point. So that budget gets 3 months of some serious work before we ever get into the new year. So starting that work now can help make that budget a much more important part of your year, because it's not just about the numbers. It's also about thinking about what you want out of your year, thinking about what your goals are going to be, thinking about what the year looks like. We do our budget monthly, right? So I had to sit there and think, okay, hold on. How many clients can we bring on this month? How many clients, when are those other clients' payment plans going to end? And how's that going to affect our numbers? Like, you start to think about other non-financial aspects of the business, and really forces you to plan those out as well. So those are my recommendations for you. Start there, but feel free to comment below the video. Let me know if you want me to follow up on anything or if you've got any other questions. And I would say, bottom line, I get how budgets can be frustrating, but I think if you follow the tactics that I've talked about today and that we talk about on the workshop, it'll be a much more enjoyable experience. So great question, Anna. Thank you. Okay, next question. And I don't have a name for this one. So I don't know who submitted this one. But this question is, how do you know if you're being too safe in your budget? How much should I increase for next year? This is a great question. And I get asked a lot, like, how much should I project growth in my revenues year over year? And there's a lot of people out there who will say, oh, it should be X%. I will tell you a lot of that depends on industry. But I care less about like having a fixed percentage and more about going back to what I was saying in the last question. What do I want next year to look like? So I listed things, right? Like I was like, I want to take some of my employees full time. I want to pay myself more. I want to streamline our sales process and the things that we're selling. I want to take more time off in the summer. I live by the beach. I really don't want to work a ton in the summer. So really thinking about that. We do take Fridays off. We don't work on Fridays here in my business. And I want to continue that. And we do that year round, by the way. So in thinking about all of those things, those may affect my numbers in my budget. They may affect my revenues. And is it possible that if I didn't do some of those things, I could increase my profits? Of course, absolutely. But what else would I be giving up? And so I want to be really careful about how I think about that stuff. Okay, great. And Colleen, I see your question. So I'm going to come back to that in a second. Let me just wrap this one up. So, when you're thinking about, are you being too safe? What I would say is start your first draft of your budget with just kind of what you think makes sense based off of the things you're thinking about doing. And then I would go in and I would raise it. I would raise your revenues. I would raise your amounts and say, okay, what does that feel like? And don't just arbitrarily raise them. Like I've heard some business coaches say like, oh, take your numbers and double them. Well, that's great to say. But are you actually going to be able to deliver on those services? Are you going to be able to do that work? What does that look like? Like, forget whether or not you can get those people in the door. I believe you can. Everybody can do that. But are you going to be able to serve those people the way you want to serve them? So that's what I would do, is I would start with kind of your baseline based on what you want to accomplish. Then I would increase it, see how that feels. Think about how logistically your team's going to be able to handle that, and keep going. And I will tell you, my business coach always says it should be a number that makes you uncomfortable. My revenue number next year makes me uncomfortable. It is a number that I cannot sit here right now and tell you we will definitely hit. It makes me uncomfortable. But I also know that stretch is what's going to make me better as a business owner, and it's what's going to make our business better overall. So that's the point that I want to try to hit. And there's no hard rule on what that point is. You just got to kind of keep adjusting it until you feel it. So that would be my recommendation for you. All right, I want to go to Colleen's question. So Colleen put it in 3 comments. I'm going to pull each one over as we read it. Okay, so multi-part question. Talked to my CPA the other day, and she said that I should move to an S Corp to max out the tax savings. Is there any other investment or changes that you can think of that we should do before the end of the year? Do you have any guidance on doing that? And just for some background, also, I filed as a sole proprietor LLC since the business started. My CPA says this still counts as an LLC and it shouldn't be complicated. Okay. Couple of thoughts. So I'm definitely going to answer the question, but I will say, I always want to be very careful here. If you've got an accountant, I want you to talk to your accountant because they are the ones who have the insight into exactly what's going on with your business. I ultimately can't give you advice unless you're a client of mine. So let me get rid of that question. Hold on. And I don't have all of your information in front of me. So I'm going to talk generally about this stuff, but I really want you to take these questions to your accountant as well. I'm going to give you some information. I'm going to arm you with some information so you can go back and ask better questions. But I think this is, it's really hard for me to give you an answer on this stuff unless I actually can see all of your stuff. But I want to say a couple of things first. Let me go back to your questions because I just want to make sure I responded to them perfectly. I'm actually going to start with your last question, which is you filed as a sole proprietor LLC. So I want to just stop right there. I'm going to do a little glossary term update here. And this is not to call you out, Colleen, but because I think it's really important for us all to understand the terminology here. There is a difference between being a sole proprietor and an LLC. So a sole proprietor is not a legal entity. By default, it is what you are. If you start making money, not as an employee, but as like a freelancer, as a business, and you don't have a legal entity, you're a sole proprietor, okay? And no one else is working with you. You're just by yourself, sole proprietor. An LLC is a legal entity that you actually like set up and form with the state. It exists as a thing, like it's super formal, okay? So I'm guessing what you probably meant was single member LLC, which means there's only one member in the LLC versus a multi-member LLC, where we would have multiple members in the LLC. So this, and actually I'm gonna pull this back up. So my CPA that says this still counts as an LLC and it shouldn't be too complicated. I don't know exactly what your CPA was getting at there. And I never want to call out a CPA and make them sound stupid because they probably were saying the right thing and it may just be getting lost in translation. I will tell you that if you have a single member LLC and you elect S Corp status, which I'll talk about in a second, it is absolutely not the same thing. In fact, it is, well, there's one thing that's the same, but from an administrative perspective, it's very different because a single member LLC, the profits or losses of that business are reported on Schedule C, which gets filed with your individual tax return. Excuse me. An S corporation has to file its own tax return. So right off the bat, you're going to have a difference there. I will tell you, in my business, I charge, understandably, for an S Corp tax return. So if you come to me and you are a single member LLC, that Schedule C is we're going to do that for you as part of the fee we're going to charge you for your personal tax return. But if you then decide to make it an S Corp next year, you're going to pay for the personal tax return preparation. You're also going to pay for the S Corp tax return preparation because now we're doing 2 returns for you. So you're going to pay hundreds. I mean, for me, that's our S Corp prices are $750 per return. So you're going to pay an extra $750 for that return. Now, that may be fine because you may be getting a lot more back in the benefit of being an S Corp, which I'll talk about in a second. But I just want to make sure that's super clear that there is absolutely a difference there. There is more administrative burden for being an S Corp. That's one piece. And there's more I want to say on that, which I will in a second. What I suspect your CPA was saying is that the profits of an S Corp are taxed the same way as the profits of a single member LLC. Meaning when you're a single member LLC, the profits of the business or losses do what we call flow up to your personal tax return, meaning they get taxed at the personal level. So they get taxed according to your personal income tax rates. When you're an S Corp, the profits or losses of the S Corp flow up to the individual members of the S Corp. And if it's one person, it's all going to go to you. If it's multiple people, it's going to get split. Okay. So again, those are going to get reported on your personal tax return. They're going to be subject to tax at your personal income tax rates. So I think that's probably what your CPA was talking about. But there's definitely a difference when it comes to the administrative complexity, or administrative burden, I should say. I talked about the extra tax return. That's number one. You're already an LLC, so you won't have to change anything there. But a lot of folks come to me and want to be an S Corp, but they don't have a legal entity. So in that case, they have to go form an LLC or a corporation. Either can become an S Corp. And once you have a legal entity, there's annual compliance, not tax stuff, legal compliance that you have to do with the state, usually filing an annual report. So there's that additional administrative burden. You also, and this is the big one, when you become an S Corp, have to put yourself on payroll. And here's why. So let's take a step back and talk about an S Corp and why you might want to become an S Corp in the first place. one thing I want to make very, very clear, an S Corp is not a legal entity. You do not go form an S Corp. What you do is elect to be taxed as an S Corp, or S Corp status, or S Corp classification, we might say. So you have to have an existing LLC or corporation to become, or to be taxed, as an S Corp. It is solely a tax status. It does not exist in the legal world. Your legal entity retains all of its legal stuff, if you will. This is just for tax purposes. So what you do is you make an election with the IRS to be taxed or classified for tax purposes as an S corporation. Now, why would you want to do that? Well, the biggest benefit, really the only benefit of being an S corp or being taxed as an S corp, is that after you pay yourself reasonable compensation, we'll talk about what that means in a second. After you pay yourself reasonable compensation, all of the profits of the business are only subject to income tax and not self-employment tax. So right now, as a single member LLC, if you have $100,000 in profits for the year, you're going to pay income tax on that $100,000 at whatever your income tax rate is. You're also going to pay the 15.3% self-employment tax on that $100,000 because you are self-employed. You do get a 50% deduction for that tax, but you're still going to have to pay it. Let's say you make the election to be classified as an S Corp for tax purposes, same $100,000 profit. Let's just say, for argument's sake, that your reasonable compensation is $40,000. Again, we'll talk about that in a second. That means you have $60,000 of profits above the $40,000, right? The first $40,000 is run through payroll. It's subject to income tax. It's subject to payroll tax, which is the equivalent of self-employment tax when we run it through payroll. That remaining $60,000, though, is only subject to income tax. It's not going to be subject to that self-employment tax. So you have the potential to save thousands of dollars on self-employment tax by having that S Corp status. Now, what is reasonable compensation and why does it matter? Well, reasonable compensation matters because it's basically the bar at which you start getting the S Corp benefit. So as you might imagine, the IRS wants that number to be really high because they want to get as much payroll tax, and the states do too, by the way, want to get as much payroll tax as they can. You, on the other hand, want that bar to be really low because you want those S Corp benefits to start kicking in as soon as possible. So if you're going to become an S Corp, you got to think really carefully about this reasonable compensation piece. And a lot of folks, and I do get frustrated at fellow members of the accounting industry, a lot of CPAs tell their people, oh, just pick a number. No. It is really critical that you make sure the reasonable compensation number is grounded in facts, that it's based or justified by industry data, by tax law, by tax court cases. It's really important that this number has basis in it, that there's some justification for it, because again, the IRS wants that number to be as high as possible. So when clients come to me to do S Corp elections, I provide them with a reasonable compensation report. It's a report that is defensible in front of the IRS. It's a report that we compile after doing a lot of research to determine what the reasonable compensation amount is for the work that they're doing. So that's a really critical step in that process, because if you don't do that step and you just pick a number, you're putting yourself at risk of the IRS auditing you and deciding to reclassify some of your profits as compensation, in which case they'll then be subject to payroll taxes, and by the way, back payroll taxes at that point because they'll be late. So they'll charge you interest and penalties, so you can end up paying a lot of money. So that's one thing I want to mention there. The other thing to note about S Corps, and this is getting really into the weeds, but I want to say it because not every CPA does a good job of educating their clients on this. When you have the S Corp status, you have to treat certain expenses differently. Things like health insurance, cell phone or internet, if you pay for them personally, they have a personal component, but they're also used for the business. Your home office deduction, vehicle, if you drive your personal vehicle in your business. Things that have a personal component as well as a business component have to be treated very differently for S Corp purposes. Now, I'm not going to go into all the details now, but suffice it to say, there are things you have to set up and put into place, and then you have to reimburse yourself on a regular basis for those expenses in order for them to be deductible for the business and not be classified as income to you, the employee, because remember, you're now an employee of your S Corp. So I'm not saying all this to scare you and say you shouldn't be an S Corp. But if you decide to go the route of electing S Corp status, you want to make sure, number one, you understand the administrative burden of it. And number two, that you've got a really good CPA that you're working with who understands this stuff. Because I will tell you, just this year alone, I've had 4 or 5 clients come to me, actually no, more than that, probably 8 or 10, come to me where they were talked into S Corps, a year or 2 ago, and they never should have made this election. A lot of times what happens is they're talked into it too early. They're not making enough money, and I'll talk about that in a second. In other rarer situations, they, because of where their numbers are at, they actually get penalized for becoming an S Corp. That's very, very rare, but it did happen to a client this year. And a lot of times they just don't understand the administrative burden of becoming one. And so all of a sudden they're saddled with all this extra work and they're not actually getting that extra benefit. Now, I mentioned something about make sure you're making enough money. Well, let's go back to that conversation about that reasonable compensation report and that reasonable compensation number, right? Let's use my example, the 100K in profits. So if that were your example and your reasonable compensation number came back at 40K, you've got 60K in profits that you're going to get to save self-employment tax on. That's a pretty good number. In that case, I'd probably advise you, go ahead and do the S Corp. But let's say your profits for the year were 30K. And your reasonable compensation number ended up being 40K. Well, all of a sudden now you're not making enough in the business to pay yourself the reasonable compensation number. So those S Corp benefits aren't kicking in. So why are you becoming an S Corp at this point when you're not going to get to take advantage of the benefits, but you still got to do all the administrative burden that I just talked about? So that's the biggest question I would be talking to my accountant about is, does this actually make sense? And making them run the numbers too. Certain states tax S Corps differently than they tax LLCs. That's not the case at the federal level, but certain states do that. If I've got a client in California, your S Corp benefit is going to be reduced because your what's it called? Is it not franchise tax, but franchise tax equivalent in California is going to be higher on an S Corp than it is on an LLC. So you need to make sure your CPA or your accountant understands that too. Like, what are actually the ramifications of this decision in the state that I'm in? So it's a lot to think about. And again, I can't stress enough, and this is not specific to you, Colleen, but just everyone in general, working with an accountant who actually understands this stuff, because I have seen way too many clients get burned, or new clients to me burned by former accountants who didn't know what they were talking about, pushed them into the S Corp election, and now they're saddled with this structure that they've got to maintain. That is more burden for them than it is benefit. So I know that was a lot of information to throw at you. Hopefully that gives you enough to go back to your accountant and ask some of these questions and say, can you run my numbers? What does my savings actually look like? Have you factored in the potential state ramifications, if there are any? What is the compliance look like? What are you going to charge me to do the return? What about payroll? What would my reasonable compensation number be? For any of my clients who are looking at becoming S Corps, or making the election, I should say, if they're kind of on the fence, if it's not an obvious decision based on their numbers, I will have them do the reasonable compensation report first to see what that number is. Let's use the 100K profits example again. If they have 100K in profits and their reasonable compensation report comes back at like 85K, I'm going to go to them and say, look, you do have a small benefit, but I don't know if it would outweigh the administrative costs. So maybe you don't do it this year. Maybe you wait till next year. Versus if their reasonable compensation comes back at 40K, then I'm going to say, hey, this probably makes a whole lot of sense. So hopefully that made sense. I know that was a lot of information. For anyone who's interested in talking more about the S Corp stuff, interested in possibly making the election, definitely drop a note in the comments and we'll be in touch. The last thing I want to say on this, and I see your note, Colleen. She said kind of a mess right now, so thank you. You're welcome, and I'm sorry it's a mess. The last thing I'll say on this is thinking about the timing. So technically, you have to make the S Corp election within 75 days of forming the entity, which for you, Colleen, isn't applicable because you've had it for a while. But within 75 days of forming the entity, or by March 15th of the year in which you want it to go into effect. So right now, if you made it today, there's one exception, but I'm not there yet. Right now, if you made the S Corp election today, you would have it go into effect January 1st, and you would need to submit that election form by March 15th. Now, there is such a thing as a late filing election, meaning, yes, I can file a form for you today that requests the election effective January 1st, 2021, so that you get the benefit of 2021. It's not a guarantee that it's going to be accepted by the IRS. It's a pretty good chance, but it's not a guarantee. So I always tell my clients that if you are having a really good 2021, let's try the late filing election, see if we can get it through, but understand that we may not be able to, so you may have to start that S Corp election effective January 1st, 2022. If you're thinking about doing an S Corp election, don't wait. Talk to, whether it's me or another accountant, talk to them sooner than later. We only have a very small number of spots for S Corp election folks for 2022, and they will fill up probably in the first couple of weeks of January. So this is not the kind of thing you can call an accountant about on March 10th and they'll do for you. Remember, we're also in the middle of doing annual tax filings at that point too. So if you're thinking about the S Corp, definitely reach out. Again, just drop a note in the comments. I'm happy to get back to you. Do not wait. It's something to start that conversation about now. So Colleen, hopefully that helped. I know that was a lot. All right, I don't see any other questions, so I'm going to go ahead and wrap us up here. Again, just as a reminder, where are my little things here? Hold on. Just as a reminder that you can always submit questions by going to megkwheeler.com/QA. We'll have our next monthly Q&A the third week of November, but we will be back here next week, Wednesday, October 27th, 2 p.m. Eastern for our money meeting session. We'll actually not be back here. We'll be on Zoom. Check your email. It is a link we send out. We don't publish it. Well, I guess we publish it in the group, but we don't publish it publicly otherwise. So make sure you check your email for that link. And otherwise, I will see you all next week. Bye for now.